Welcome to my channel, guys. So I left this on the screen because I wanted this to be the first thing you see when the video starts. So when you look at the screen right now, tell me, what do you see? I'm going to give you just a while to look at the screen before I say anything. This is real simple, very simple. So this is what I see on the screen right now. I find just two lines. You see the horizontal line and you see the diagonal line, which is the trend line. So what's our focus today? Our focus is showing you how to take advantage of diagonal, or you can call it the trend line breakout. It is real simple. I want you to look at this chart again because we're going to come back to how we arrived at this level. So I'm going to make that really easy for you and put it all out. So this is it. This is the horizontal line. You can see it's at a level that's really obvious. It's like it's a trigger zone. Then here you can find what do they call it, the trend line, right? And you can see that we are on a 1 hour chart, and you can see our breakout right here on this candle. Really obvious. You can see that, right? It's really obvious, pretty obvious. Then I told you I like to intercept my horizontal line with the trend line, giving me a confluence. So you can see right here that there is a breakout at this level, and there was a minor retest, and the market went all the way up, Let's see how long this lasted. This lasted for Control Y. This is the first day, second day, third day, fourth day, 5. It lasted for about 6 days. So I'm going to show you how we arrived at this point, and you're going to see how simple this is. Okay. So, but before I do that, also I want to also use my Fibonacci tool, to find out how far market will go, from A to B, drag it all the way, and you can see that the market got to the last reversal zone, which is 161.8, right? So let us get into it. So guys, this is it. One of the challenges that traders face is that most people are impatient and they want to make money quickly, as quick as possible. So thereby they go to lower time frames to look for opportunities. And when you find the market moving that fast in the lower time frame, you have to know that the VIX on the lower time frame will be much higher, because you're going to be finding market opportunities every few minutes. And who wants to trade like that? I mean, the big boys look at the market from a larger perspective. So this is what I'm bringing back to you. I want you to get rid of that thought of trading on very tight time frames. I mean, how much pips can you really get? You want to be relaxed. When you take your trade, you want to be at ease, and you want to just take 1 or 2 trades per week, but yet very effective. So like I always say, if you listen to all my videos, and I advise you to do that as well. Go check out all of my videos. Maybe not all, most of them. So the question you ask yourself is, what should be the first thing I look at in the market? What should I do? Remember, we're talking about technical analysis. It has nothing to do with fundamental. Even if sometimes fundamental analysis, they are a bit related into the trading strategy as well, but we are focusing on technical analysis. So let me help you with that. The first thing you should do as a trader, as a technical trader, is you look at the market from a larger perspective. I cannot say it is enough. Look at the market from a higher perspective. This is how you win. The earlier you start doing this, the better for you. The year is about to round up and you're still doing the same thing you've been doing. Don't you think it's time for you to try something different? Look at the market from a larger perspective. So where's your larger perspective? Definitely not 1 minute. Has nothing to do with the minutes or even hours. You want to look at the weekly time frame. Yes. And most people say when you look at the weekly time frame, you don't find opportunities as well. That's not true. If you have like 4 or 5 days spread out, you're able to find a few markets in a week. Let's say 2 markets, which is good enough. So let's look at our weekly time frame. This is 1 hour, 4 hours. This is our weekly time frame. So why are we here? On our weekly chart, what are we looking for? We are looking for market direction. We're looking for the dominant trend. There's always a dominant trend. The reason it's called a dominant trend is because the market is always trending. So if I go on, let's say, 5 minutes charts, sometimes you find the market trending on the 5 minutes chart on the bearish move, right? That's the bearish move. It's called a trend on 5 minutes chart, bearish move. However, when you go check on the higher time frame, sorry about that. So I had to turn that off. So when you check on the higher time frame, you get to see that the market is on a bullish trend, right? So this is why you have to focus on the higher time frame. There's a saying they say in the forex market that the dominant trend will always win, right? So let's get right into it. We have been talking too much. This is your weekly chart. On your weekly chart, I thought about how to know where the trend is going. You can go and check out that place, you know when the trend is the dominant trend. It is obvious that the market is on an uptrend. Why? Because you find higher highs and higher lows. This is high, and the low is high. And it broke the next high, and the next low is also high. This is how you know the market is on an uptrend. So establishing this fact now, you now know that you are looking out for buy opportunities in the market. Yeah, you have no business going for yourself, trust me. And even if you want to do that, that's just will be a topic for another day. I do not like to go against the trend because it's a bit risky. The idea is to cut your losses and make the most profit as possible. So now we've established the market is on a bullish trend. We are looking for buy opportunities, right? So we break this thing down. We're going to break it down to the 1 hour time frame, right? So set from higher time frame. Now we'll go on the daily charts, and we are looking out for the best possible areas to look for a buy, right? So we are going to be focusing on what happened last week on the time this video was made. So our breakout is going to be something that already happened last week, and I'm going to show you how we got to that point when we started at first. So this is your daily chart. The daily chart, it's going to be around, remember our focus is around this whole zone, is our focus of a market that has already happened. So this is going to be, I think, right about here. Let's calculate this as Friday, Thursday, Wednesday, Tuesday, Monday, Friday, Thursday. Yeah, it's going to be right about here. Correct, right about here. So this is where, since the market is already on a bullish trend, you are looking out for buy opportunity. So what you are looking out for on your buy opportunity on your 1 hour, you are looking out for chart pattern formations, and there are different types of chart pattern formation. There's double bottom, triple bottom. There's inverse head. There's head and shoulder. Yeah. What else again? Triangle formations. Ascending, descending. So we're going to be looking out for bullish. So now we've looked at our daily charts. Now we see we are looking out for where the market will have a trigger, and you can see that there's this zone right here. You can see how italics. This is a zone to look out for, right? Then we're going to break this down even to our 4 hours. Okay? Are you seeing what's happening? At this point, the market is beginning to take shape, and there's something that's really obvious here, guys. You can find there's a long candle right here. This is a good breakout. You can see that, right? This is a breakout. Now we're not going to stop here. We're going to go even further. I can already see market formations already, but we're going to break it down. But before we go to our 1 hour, I'm going to show you what I see right here. When you take your trend line, you can draw your trend line right here. You can see that, right? This is a good market move. The formation is already formed. You're just waiting for the breakout. Now we are going to tally this with our horizontal line right here. How did you get this? There's a market consolidation right here. Okay, so we're going to go further now. We're going to our 1 hour. This is 1 hour. You can see the market right here. You can see our trend line. It's pretty clear, right? Let me know. Let me know in the comments section below if this is really interesting and if you're getting what I'm talking about. I want you to get this. Trust me. I want you to get this. I'm not sure you get this any other channel. I want you to get this and send it to people who you know should hear this. So this is our point right here. It's pretty obvious. This is our point right here. See, guys, if you follow the system, I can almost guarantee that you will hardly get a loss. Trust me, I've been there, and I want you to get this. So this is it. This is where the breakout happens, right here. You can see the move right here. Now remember, the reason why we are so confident on placing a buy on this trade is because first of all, we have identified the dominant trend on the weekly chart. Then we went to a lower time frame, the day one, okay, and we looked at for trigger zones, possible zones that the market will retrace and continue on its original trend. And on those levels, when we go on 4 hours and on the 1 hour, we are looking at for chart pattern formation. This is where you find consolidations like this. See this whole, let's see how long this consolidation takes. It took 1 to about 3 days, for a formation. It took about 3 days. Then on a certain day, it gave the chart pattern formation, and it broke the horizontal line and the trend line. Then, guys, that is your cue. So let's see how far this went from here, and see how long it went. This is good money. This is good money. This is good money. So, guys, this is how to trade trend line. This is how to trend line are not done in isolation. You don't just wake up in the morning and you see, oh, that's broken the trend line, I'm buying. It doesn't work like that. You have to first of all identify the dominant trend, break it down to lower time. You can even go back to as low as 30 minutes. But I love to stick with 1 hour. I love 1 hour a lot. So now the question now is, let me take this out for now. The question now is, now you've entered the trade and you are quite confident that you're in the right trade. The question now is, how far should this trade go? This is something that every trader deals with. You don't want to leave too early, right? And you don't want to leave too late. Some people stay too long and the market starts tracing like it did here, and they say, oh, if I had known I would have left the market. Don't be too greedy. So this is what you do. There are 2 ways to deal with this. 2 ways. One, you can use your Fibonacci to look for exit points, and you can also use I like to call it the manual method, based on the previous market. So let's look at the previous market. Before, when this breakout happens, look at the previous move. There's a pattern here that is being formed that people fail to see. Watch. You see this movement right here. When you take it back, you're going to be seeing that it's almost equal to the previous move. Guys, I hope you're seeing this. So when you measure the previous move from the bottom to the top, right here, before the market, before the market had a decline like this. I hope you're seeing this. Okay, let me use the green one. See this move right here. This move, most of the time, not all the time, don't quote me, I said most of the time, so you don't lose money and say the trading chit channel taught you this. So most of the time, the previous move is equal to the next move. So you can see, so you can use this to measure your exit points, measure the previous points and let it be equal to the next one. So you don't have to wait till market gets to the very top. You can just exit right about, let's say at 70%, maybe right about here. Here, you're done right here. So let's see how far this is. It's not bad, is it? 400 points, which is pretty insane. Okay, so the next way, the second way to do this is to take out the Fibonacci. Yeah. So you measure from the highest point down to the lowest points and drag it all the way, and you'll be able to tell. So this is like I thought about Fibonacci on my channel. You can go and search for it on my channel. You see Fibonacci. You'll see that there are 3 Fibonacci levels: 127, 141, 161. So you can decide to exit the market on the first Fibonacci level if you don't want to repeat it, because that too would be enough. So guys, this is how to trade trendline breakout on your 1 hour. There's no rocket science. It's as simple as that. Identify the dominant trend where weekly charts. Sometimes I want to check, stay with the weekly chart, break it down to daily, look for places, trigger zones. Sometimes they call it supply and demand zone, sometimes they call it order block, whatever the name is, but you would know when you find these things. Sometimes these names can be really confusing. I'm breaking it down, making it simple. Then after your day one, you can now break it down 4 hours and 1 hour to look out for what chart pattern formations break out. That's it. I didn't talk about the stop loss. You know what to do with stop loss. Stop loss should be below the previous trigger, or the trigger zone, which is going to be around here. So, guys, I hope you found this content really helpful. Do well too. It took a lot of time and research to put this together. I appreciate it really if I get a like. It's a new channel. I appreciate it if I get a like, and also if you get to subscribe as well and share to your groups, Facebook, and whatever community you belong to. I would really appreciate it. It's going to be encouraging for me. So I'll keep putting up good content. So see you guys in the next video.